Hi there, welcome to Kneppy Invest. Time for the second Appendix 4C or 5B for the September quarter. The first one was a little company called Jackstar. And really, the only reason I did a video on that company was because they were the first company to release their quarterly report for the quarter. Now, I've decided to do Telix Pharmaceuticals because receipts up over 700% from last quarter. Now, we know that receipts were going to grow at a significant rate from the previous quarter because there is a lag in receiving of receipts compared to revenue. And I'll talk about that in the next slide. But the share price of Telix has been significantly volatile over the past, so we'll say 6 months or so, because I don't think the market really knows how to value this company at this point in time because of the fantastic growth in receipts, because one of their products has gone to market and we have seen receipts grow 700% in 1 quarter. Hence, the market is trying to figure out what the value of this company is. And the day they released the Appendix 4C, which I think was the 20th of October, share price actually dropped about 7% after initially being up. And then today, on the 21st of October, the share price has risen 12% when the overall market was in the red. So obviously, there were some people out there, some fund managers out there who read the quarterly report and found something they like. I'll talk about what Telix Pharmaceuticals does in the next slide, I think, but this is a subtle difference between receipts and revenue. Now, most of the time, you won't be harmed by choosing one over the other, but you do have to know there is a little bit of a difference, a subtle difference between the two, because of when they're recognized. Receipts and revenue are recognized at different stages. So sometimes, particularly if you do see massive growth in revenue, you're going to have a bit of a difference between the two. And Telix Pharmaceuticals definitely had this in the June quarter. In fact, this company only had receipts of about $5 million, but reported revenue of $22.5 million. So we know that $17 million of that revenue didn't come in receipts in the last quarter. So at least this company was going to receive $17 million of receipts in the September quarter. So that's very important to note. And the other thing here, because they've just started selling their Lucix, so it's considered the first commercial quarter, there was an increase or more than a tenfold increase of revenue from the previous quarter, which was 1.9 million. So again, this company is quickly growing. And right now, I don't think the market knows how to value this company. And to be honest with you, I have no idea how to value this company because we don't know how much the receipts and the revenue for this company will increase because of this one product. Not only that, they have significant amount of products in their pipeline, and I'll discuss that later in the video. So what does Telix Pharmaceuticals do, and why is the market so excited about this company? So the current market cap of Telix Pharmaceuticals is around about $2 billion. So the market sees something here. And if you just looked at the past year in revenue or receipts, not even looking at this current quarter, you would think this is massively overvalued. So the market is forward-looking and the market sees something here. So Telix is developing a pipeline of molecularly targeted radiation MTR products to image and treat cancer. And to be honest with you, these are my favorite sort of companies. Some people might favor tech companies like SaaS companies, but the margins in these sort of companies are significantly higher than software as a service companies. And the way I look at these and the difference between these two sort of companies is Telix Pharmaceuticals have a competitive advantage and a moat in what they have developed. A lot of SaaS companies have zero competitive advantage and zero moat. But this video is not comparing the two, but just keep that in mind that these type of companies are my favorite type of company. So what exactly is molecularly targeted radiation? Now, I might absolutely butcher this definition, so I am using Telix Pharmaceuticals website to help me through this little point. So targeted radiation drug. So what this means is a radioactive isotope, or the payload, is attached to a targeting agent such as a small molecule or antibody, which has affinity for unique biomarkers found on the surface of cancerous or diseased cells. So depending on the payload, either imaging or therapy can be delivered. The targeted radiation drug is administered into the bloodstream and circulates throughout the body. And the targeted radiation seeks out cancerous or diseased cells wherever they are, including small metastases, can't pronounce words here, where the cancer has spread, and binds selectively to its targets. This is different from traditional radiation therapy, which is typically only delivered to a local tumor site. So this is very important because they mentioned that there's this thing called the bystander effect. So MTR therapies are designed to destroy the tumor target plus adjacent tumor and supportive cells. That is called the bystander effect. So if you like what you've heard here, maybe you can do a little bit more research on this particular topic. But this is a reason why Telix Pharmaceuticals is now valued at over $2 billion, and why receipts and revenue of this company have simply taken off, because one of their products has gone to the market, and that sort of market loves this product. I've already mentioned Telix Pharmaceuticals has a lot in their pipeline. So these are all their current treatments they have in regards to prostate cancer, kidney cancer, brain cancer, and one called BMCRD. So I'm not sure what that is. But we also can see there are 2 products in commercial stage, 2 more products in the phase 3, a few products in phase 2, and more products in phase 1. So the key for Telix Pharmaceuticals moving forward is to get as many products into the commercial stage. And that decreases the risk, because no doubt there will be other companies researching these sort of treatments for these sort of cancers, and potentially a better treatment will come along in the future. I'm only saying potentially, but there definitely will be some competitors out there. So I think the key for this company is to de-risk, and the way to de-risk, or the best way to de-risk, is to have as many products out there in the commercial stage. Now, a few facts in regards to Telix Pharmaceuticals, founded in 2015 by Christian Behrenbruch and Andreas Kluge. Sorry if I have butchered your names. Listed on the ASX about 5 years ago. So they're almost at the 5-year anniversary, 15th of November 2017. And to be fair with this company, I didn't really know much about Telix Pharmaceuticals during their first 4 years on the ASX. And the main reason I didn't know much about this company was simply because they had no revenue, or very little revenue. The current CEO is also one of the co-founders, Christian Behrenbruch. He has a 7.4% stake, and the co-founders have 14.5% overall control of the company. And that is pretty good skin in the game. And I really like skin in the game. Other investors like skin in the game as well, because that means the motivation behind the co-founders is fairly identical to what shareholders want. And the current market cap of Telix Pharmaceuticals is around $2.1 billion. That's a share price of $6.67. That was I think the share price actually is $6.77 at the close of trading on the 21st. So if you are watching this video well after the 21st of October, have a look at the share price, because the shares of this company are really volatile. And again, I've probably already mentioned this two or three times in this video. And I think the reason why the shares of this company are really volatile is because the market just doesn't know how to value this company just yet. And the ticker code for Telix is TLX. And I'll have to say also, if the market cap was, say, $200 million, I'd be going all in on this company. But, of course, the market is seeing something there, just like I'm seeing something there. And that's why the markup of this company is quite high for Telix Pharmaceuticals. Now, let's have a look at the Appendix 4C for September quarter. But before we have a look at that Appendix 4C, let's go back 1 quarter. Now, in a lot of these Appendix 4Cs or 5B videos, I like to go back 1 year, but for Telix, we're only going back 1 quarter, because 1 year ago, they had minimal receipts. But receipts for the June quarter grew from about 1.9 million to 5.4 million. But you notice on all the payments or the spending, this company was spending a lot of money. So $17.4 million in 1 quarter on research and development, $8.6 million on product manufacturing and operating costs, $4.8 million on advertising and marketing, $9 million on staff costs, and $8.6 million in administration and corporate costs. And even though the company did receive $17.2 million in government grants and tax incentives, they still burned through $25.8 million of cash in this particular quarter, and that's in operating activities. But they have a lot of cash on hand, but that cash on hand was diminishing quite quickly because of the cash burn. So the cash on hand fell from $154 million to $122.6 million. They also spent $2.1 million on capital expenditure, $6.8 million on intellectual property as well. So at this point in time, the company was burning through a lot of cash. But we also know, based off the revenue and the difference between revenue and receipts, that the company's receipts for the September quarter was going to be significantly higher than the June quarter. The main thing I wanted to know or see was how much it grew and whether the company could be operating cash flow positive or near to being positive. So let's have a look at the September quarter. One thing the company did is change the format of their Appendix 4C, or the consolidated statement of cash flows. So a little bit different here. I'm not sure why they did this, but receipts have absolutely grown at a significant rate, increasing from over 5 million to 44.5 million. Not only that, revenue is quite a bit higher than receipts. We'll have a look at that in the next slide. Now, even though they are spending a lot, spending really didn't grow all that much in the September quarter. So $16 million for research and development, $10.7 million of product manufacturing, $5.8 million in advertising and marketing, $10.6 million in staff costs, and $6.9 million in administration and corporate costs, and only received $495,000 in government grants and tax incentives. And overall, the company was operating cash flow negative by only $5.3 million. They also spent only $1.7 million on capital expenditure, but because of favorable exchange rates between the United States and Australia, they also received or gained $1.4 million on the exchange rates. And have a look at the cash burn, significantly lower than the previous quarter. In fact, cash on hand only fell by about $5.5 million. So things are moving in the right direction for Telix Pharmaceuticals. And I would not be surprised that this company is operating cash flow positive, even free cash flow positive in the December quarter, because I would expect that the receipts for customers and even their revenue will continue to grow from here. And if they keep a lid on the spending, this company could be fantastically operating cash flow positive in a few quarters' time. And the other thing I like to look at for these type of companies that are really growing quickly is the difference between revenue and the cash receipts. And that difference was about $11 million in this particular quarter. So Telix did receive or report total revenue of $55.3 million from global sales of Illuccix, up 168% on the previous quarter, which I think that was $22.6 million anyway. Anyway, so the main story here is fantastic growth in their product. And the question is, how much more can these sales grow in the next few quarters? I think they will continue to grow at absolutely stellar rates. And I think that's the reason why the market is absolutely excited about this company. Now into the receipts history for Telix Pharmaceuticals, and you will not see a better receipts history than this one from any other company I have looked at in the past 10 years, because receipts have grown from, we'll say, $990,000 in the December quarter 2021, up to $1.9 million the March quarter, up to $5.4 million the June quarter, and then up to $44.5 million in the most recent quarter. And that is a 700% rise in receipts. If you looked at the revenue, a little bit less sensational, because it only rose by about 168%, if I remember correctly, from the previous slide. But the main thing here is this company is growing their receipts, their revenue at absolutely stellar rates, and I think that will continue in the future. And that's why, probably mentioned this about 5 times, that's why the market absolutely loves this company at this point in time. But the market is still unsure about the value, or the right value, the correct value of this company. So if you do like what you're hearing, if you are very bullish on the future of this company, I think you can possibly buy the shares of this company at cheaper prices than $6.77. In saying that, maybe this is the low of the share price, and we'll see the share price take off from here. But just because of the volatile nature in the share price, don't be surprised to see the share price fall a little bit from here, and then rise rapidly, and then fall and rise rapidly again. And since I have mentioned the volatile nature of Telix Pharmaceuticals, let's have a look at a couple of charts. I'm not going to look at a daily chart. So actually, yeah, this is a weekly chart. going back to when the company listed on the ASX back in November 2017. In the next slide, we're going to look at the 5-minute chart from the start of trading on the 20th of October, because even after the company did release their Appendix 4C for the September quarter, share price has been really volatile over the past 2 trading days. And even during the days, it has been extremely volatile as well. But if we go back to 2017 all the way through to 2018, even 2019, share price actually did reach a low of about 50 cents back in 2018. So not a lot of interest in this company back then, not a lot of volume. The main interest was when the company did IPO, but we saw the interest in this company start to gain steam back towards the end of 2019. We saw share price starting to rise on increasing volume. So that's really when the market became aware of this company. And then towards the end, we'll say the middle to the end of 2020, that's when we saw the share price of this company break out. Not as much volume as what you would like to see on a breakout, but the share price did break out just above $2 and then kept on climbing over the next year and a bit. In fact, the share price rose from $2 to a high of $9. But you can just see what the share price has been doing over the past year or so. Share price reached a high of about $9 almost 1 year ago, then fell back all the way to $3.50 in May of this year, then took off again, increasing from $3.50 to $8 in about a month or 2 months of trading, and then pulled back. And now again, we have seen some buying coming in, and the share price has absolutely taken off because of this Appendix 4C and some other news as well from the company. So let's have a look at the 5-minute chart just to see the amount of volatility in Telix Pharmaceuticals share price over the past 2 days after they released the Appendix 4C. And this is quite fascinating, what has been happening with Telix Pharmaceuticals share price over the past few days. I just wished I was taking note of what was happening with the company's share price, because it does seem around about 11:30 a.m. on the 20th of October, just after they released the quarterly report, that was the time to buy. And talk about why in a second. But they did release the quarterly report just before open. So on open, the market got really excited. In fact, the share price was up a fair bit. Share price actually rallied to about $6.85 in the first 5 minutes of trading. And then we saw it fall all the way from $6.85 down to $5.90, not quite $5.85. And right on the low, we saw some really big volume coming in. And that is a thing to look for to pinpoint the exact low. When you see some high volume coming in as the share price has dropped, that is telling us some people, some big boys, some big women with lots of money are coming in because they might see value at those prices. And that was a low in the share price over the past 2 days. Not only that, share price did rise a little bit during the rest of trading on the 20th of October. But on open on the 21st of October, after some fund managers, some experts read Telix Pharmaceuticals' quarterly report, they saw something they liked, because the share price of Telix did open higher and significantly higher on the 21st of October. In fact, the share price closed at $6 on the 20th and then opened up at around about $6.30. So that was a 5% rise in share price on open. And then the share price of Telix Pharmaceuticals kept on rising during the rest of trading on the 21st. So a nice little bullish run in the share price. But beware, I've already mentioned this, share price and the trading of Telix Pharmaceuticals is quite volatile. And you know the reason why it's volatile? It's because the market doesn't quite know how to value this company at this point in time. That's all I have looking at Telix Pharmaceuticals' quarterly report for the September period. Receipts up 700%. That looks way more fantastic than the revenue growth, which was only about 180%. But again, there is a difference between how receipts and revenue are reported. So not different time frames, but they are reported differently based on how they're recognized, probably the best way to put it. So if you have any thoughts, any concerns, any comments in regards to this company, I'd love to hear it. So leave in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified that can speak to your own financial needs. That's it for this video. Have a good day. Bye.